What's up, everyone? Today I'm showing you another real backtest from the Jagfx DCA Expert Advisor, this time trading EURAUD on the 4-hour timeframe. This backtest ran from January 2023 through November 2025, nearly 3 years of data. But what makes this one special is we're using some advanced risk management features that really show their value in the results. Results overview. Let's start with the numbers. Total net profit, $10,788.85. That's over $10,000 in profit over nearly 3 years. Compare that to the GBP-AUD results we showed earlier, which made about $2,000. This is significantly better. The profit factor is 3.94. That means for every dollar lost, the system made $3.94. That's exceptional. Anything above 2 is considered excellent, and we're sitting at nearly 4. Out of 223 trades, 184 were profitable. That's 82.51%. But remember, in a DCA system, all sequences close in profit, so this win rate reflects the system's ability to manage sequences effectively. But here's what I want to highlight. The equity drawdown is 4.27%. Now, that's higher than the GBP-AUD example we showed, but it's still excellent risk control. Most professional traders consider anything under 10% well managed. We're at 4.27%, and we generated over $10,000 in profit. So what made this setup different? Let me show you the advanced features that drove these results. Advanced position sizing, step-based system. The first key difference is position sizing. Instead of fixed lot sizes, we're using step-based position sizing tied to account balance. Here's how it works. The system calculates how many steps your account has based on a step amount. In this case, the step amount is $5,000. So if your account is $10,000, that's 2 steps. Each step adds 0.01 lots to your base position size. This means as your account grows, your position sizes automatically scale up. If you start with 10,000 and grow to 15,000, you go from 0.02 lots to 0.03 lots automatically. This is compounding in action. Your profits help generate larger profits, but it's controlled and systematic. The Fibonacci multiplier still applies on top of this. So the first position might be 0.02 lots, the second is also 0.02, the third is 0.04, the fourth is 0.06, and so on. This progressive sizing, combined with the step-based scaling, creates a powerful compounding effect. Risk reduction feature. But here's the feature that really sets this apart: risk reduction. This is enabled and set to activate after just 4 trades in a sequence. Once a sequence has 4 or more positions, the system monitors for a very tight exit condition, break-even plus just 2 pips. Think about that. Once you have 4 positions in a sequence, if price recovers to just 2 pips above your average entry price, the entire sequence closes. This prevents extended drawdowns. It locks in small profits quickly rather than waiting for larger moves. This is different from the recovery mode we discussed in the GBP-AUD video. Risk reduction is proactive. It says, you've built up enough positions, now let's protect capital. If price gets back to break-even plus 2 pips, we are out. We take the small profit and move on to the next opportunity. This tight buffer of 2 pips might seem aggressive, but look at the results. It works. It prevents sequences from dragging on and eating into profits. It keeps the account moving forward. Conservative sequence management. We also set maximum sequences per direction to just 1. That means only 1 buy sequence and 1 sell sequence can be active at a time. This is more conservative than the GBP-AUD setup, which allowed 3 sequences per direction. Why does this matter? It caps your exposure. You're never holding too many positions at once. Each sequence gets full attention, and the risk reduction feature can do its job effectively. End-of-day profit protection. Another key setting is end-of-day management. We have it enabled to close profitable positions at the end of each trading day. This locks in profits daily rather than leaving them exposed overnight. We also have Friday-specific end-of-day management that closes profitable positions before the weekend. This prevents weekend gap risk on profitable trades. If you're in profit on Friday, you lock it in. Simple, effective risk management. Why these results are impressive. So why are these results so much better than the GBP-AUD example? It's the combination of features working together. The step-based position sizing means as profits accumulate, position sizes grow automatically. The risk reduction feature prevents extended drawdowns by closing sequences at breakeven plus 2 pips once they have 4 trades. The conservative sequence limit keeps exposure controlled, and the end-of-day management locks in profits daily. The result, $10,788 in profit with only 4.27% drawdown. That's a profit factor of 3.94. That's exceptional risk-adjusted returns. But here's the reality check. This is still one currency pair on one time frame. The real power, as we discussed before, comes from scaling to multiple pairs. If you can achieve similar results on 5 different pairs, you're looking at over $50,000 over 3 years instead of $10,000. Final thoughts. This EURAUD example shows what's possible when you combine the smart, indicator-based DCA system with advanced risk management features. Step-based position sizing for automatic scaling, risk reduction for capital protection, end-of-day management for profit locking. The key is these features work together. They're not competing with each other. They're layered protection that keeps risk controlled while allowing profits to compound. Remember, this is real trading data over nearly 3 years. Results will vary by pair and time frame, but the principles remain: smart position sizing, proactive risk management, and systematic profit protection. If you want to learn more about the Jagfx DCA Expert Advisor and these advanced features, check out the link in the description. We've got full documentation and more backtest results. Thanks for watching, and remember, trade smart, trade safe, and always manage your risk.